Could you imagine what would happen if all the properties that aren't selling actually had to be priced at a level that would cause them to sell? The median home price would be substantially lower in many of these markets. Now, we've kind of been stuck in this strange space where everybody's expected interest rates to go down, including sellers, and they've been very hesitant to lower their prices because they think interest rates are going to go down and then buyers can pay more for their property. And so what's happening is a lot of sellers are overpricing their properties. They're just sitting on the market and nobody's buying them. And then they're canceling or expiring and the sellers just aren't selling. We aren't seeing enough price reductions across the board to really start to clear a lot of this inventory. And if we did, we would see much lower median home prices across the board throughout California if the inventory was actually moving. And I believe if interest rates stay high for longer, we are going to start to see those price reductions. We're going to see a lot of sellers want to get out. They're going to start lowering prices. We're going to see the first domino fall. We're going to see widespread price decreases. And then it'll become clear to everybody that we are in a buyer's market and no longer a seller's market. And so sellers will have to be more aggressive, cut faster, be lower than their neighbor that's trying to sell in order to entice a buyer to buy. And so that reality is very likely to happen if rates continue to stay high.